Objections? We don't get no stinking objections.
Welcome back to another amazing episode of the Perfect RIA podcast. I'm your co-host, Micah Shalansky, and with me, as usual, the legendary Matthew Jarvis. What's going on, bud?
Micah, I'm living the dream here in the office this week. Just got done with 3 prospect meetings. And Micah, when I meet with prospects is when I'm reminded more than ever about why we created this podcast, right? Like our goal with this podcast was, so often we saw advisors that would read in a book or they would hear in a presentation or from a wholesaler how you're supposed to meet with a client or supposed to meet with a prospect. And then you and I would try those things in prospect meetings. This is before we knew each other. And they failed miserably. Things like write down for me the names of 5 people who would like to get our newsletter. Just write down, or I get paid in 3 ways, right? So we heard all this terrible advice, and then we slowly learned that really the only people who know how to do a prospect meeting or a client meeting are the people actually doing prospect meetings and client meetings. So we created this podcast and the Perfect RIA coaching program so we could just share like what it is we're doing so that when you, dear listener, walk into a prospect meeting or a client meeting, you're like, all right, if this worked for these clowns, Jarvis and Micah, if I just do what they did, I'm clearly better looking, I'm clearly smarter, I'm clearly whatever, this will work for me.
You know, I love it. You know, it's that aspect, and again, just to recant what you said, we were tired of advisors getting told of what to do about information from people that weren't advisors, and they weren't really focused on how it worked on the end. And Jarvis, as you said, that's why we created the Perfect RIA, so we could show advisors exactly what we have done and why it works, and also what doesn't work, right? So we're super transparent in this. At least we try to be. It's saying, hey, this is a mistake that I made. Don't do the same thing. Let's avoid these things. Let's make sure we're focused on your practice and actually delivering value to your clients.
Yeah, for sure, for sure. Well, Michael, let's talk specifically today about what works and what doesn't work in prospect meetings. Specifically this idea, and I'm going to call this a misnomer, that we get objections from clients or prospects, right? That they come in with an objection. And in my experience, well, once I sort of learned this, 9 times out of 10, what this is not an objection. It's really a question. It's really a sort of like a misunderstanding. Like we missed each other somewhere, but it can come across to me as an objection.
You know, it can. And I used to really focus on objections until I realized there actually aren't really objections. No. You know, it's all about how you're framing it and how are you doing it. And Jarvis, it's really about, are you coming into the client meeting, the prospect meeting with an open mind of curiosity about what their questions are, focused on delivering value? And if we can shift to that mindset, by default, you might say, yes, I'm in that mindset. But if you have objections and your meetings aren't going to go successful, you don't have that mindset. That's how I'm going to push back on you, right? It's not about technical skills. It's about your ability to communicate. And if I can, I was talking about this a little bit before the pod, but I had a client, a newer client. We're in the asset transfer stage and whatnot, a larger relationship, about $5-6 million. And they were onboarding, and it got a little hung up in the onboarding process, you know, with their asset transfers, got a little snagged. And then I started getting emails and calls from them saying, hey, they only want to do ESG investments. And it's, you know, that's just not what we do. We can have a political conversation about that, but short answer is that's not what we do. So I started to get, when I saw them on the calendar, because we had to come in and chat about this, in my mind, I immediately said, I'm just going to graduate them, right? I'm done. I'm going to graduate them and we're going to move on. And it was the day of the appointment because I'd mentally kind of checked that off. And I was like, whoa, I'm not looking at this correctly. I'm not going into this meeting with genuine curiosity and openness on delivering value, right? Not openness in changing all of our processes, but genuine curiosity about what their questions are and delivering value. I have come based on a random email and an article she sent me. I have come to this conclusion on what I'm going to do. And I'm like, this was really immature and a poor way to run this. And so I went into the meeting with bounds of curiosity on what her questions were, what she was concerned about, and da-da-da. We went through the process on how she wanted the ESG investments. And I said, well, that's one way to look. This is our investment philosophy. At the end of it, she goes, you know what? That makes a ton of sense. We're going to move forward with your investment philosophy. And it was done, right? And Jarvis, I had got in my head that I was predetermined this conclusion, this negative conclusion about having to graduate the client because they sent me an article. I mean, how ridiculous is that?
Yeah, there's definitely a dichotomy, right? Because there are firm lines where we say, hey, this person, right, if they don't meet the 3 Ps, personable, profitable, and productive, they cannot be a client, right? But to your point, to be curious. And I think, as you pointed out, it's easy for our egos to get in the way, right? To assume that that what is a question about their life savings, right? What is a question between the difference of them having money and running out of money, that is somehow a personal attack on me, right? So this person with their ESG question, or we'll talk about some other examples, right? This is their life savings, right? And so they may have this article or something they read or something they heard, but at the end of the day, what they're really asking is, am I going to run out of money and die broke, right? That's the end of the day. And so I need to be incredibly empathetic about that because it's a very real, very serious question.
And Jarvis, as working with the other advisors in our team growing, right, one of the things that I had mentioned to them is you cannot take these questions as a personal attack because sometimes it can feel that way, right? When we're not in the right mature mindset that, you know, they're questioning what you're doing, questioning your recommendations, therefore they're personally attacking you. No. They have a question. And this goes back to setting the proper expectations, communication standards on onboarding with a client. That's one of the things that you and I talked about before. Whenever we onboard a client, one of the things I always want to do when I'm meeting with a prospect, I wish to almost as soon as I can give them permission to push back on me. Right? And it's very clear. I said, hey, at any time we're going through this and you have a question or something in the back of your mind kind of stands up and it doesn't make sense, I need you to push back on me, right? I want you full permission to do this because here's the way it should work, is that if I give a recommendation, it should clearly line up with your goals. Right? Now, maybe I didn't communicate that well, but if I ever give a recommendation that doesn't line up with your goals, that is a red flag, and you should have a lot of concerns, whether it's me or anybody else. Now, sometimes your goals change, and so we need to realign kind of our recommendations to align with your goals, but we always should be focused on your goals. Mr. and Mrs. Client, is that going to be okay with you? And there's a lot of positive feedback I get from that.
Yeah, it's great when you give people permission to do what they already had permission to do, right? I mean, it's their money. They have every permission to ask you questions or to raise objections, right? But by saying, hey, just like you said, Micah, hey, if any time I ever make any recommendation and it doesn't make sense to you, it doesn't seem to align with your goals, please stop me. And again, they already had that permission. Just like we say, hey, if you ever look at our fee and you feel the value's not there, we need to part ways as friends. They already had that permission, but we're granting it again. One of the prospects I met with this week, when he did his intake questionnaire, he put on there, hey, listen, I'm very skeptical of financial advisors and I'm very fee sensitive. And so my office said, hey, Matthew, did you see this guy's notes? Like, do you think we should meet with this guy? And I said, 100%.
Just cancel the appointment now. He has an objection. Just cancel the appointment today.
Cancel his appointment. And I said, 100% we're going to meet with this guy because what he typed into an online form, it was not rude. I don't see any objections here. In fact, when he came in and sat down with him, I said, hey, I saw in your notes, and again, I appreciate you filling those out, really helps me be ready. I saw in your notes that you're very fee sensitive and you're very skeptical of financial advisors. And I just want to take a second and congratulate you for that. And he rocks back in his chair, says, what do you mean congratulate you for that? I said, dude, this is your life savings. You have one shot to get retirement right, just one. You spent your whole life saving this money, and you should be incredibly skeptical, and you shouldn't pay a penny in fees if you're not getting value in return. So whether you work with me or not, I want you to hold on to that fee sensitivity and that skepticism anywhere you go. Really, the discussion was done at that point. He's like, you're my guy. Everybody else was like, well, hey, you got to understand about fees, and you should be skeptical of other people, but not me. No, you should 100% be skeptical.
Yeah, I was zero problem. Like, push back on my recommendation, push back on my questions, be skeptical. That's okay, right? We can still have a positive conversation. And this is where if you were getting triggered, if you're getting irritated by this, it's your ego that's coming into play. And by the way, I'm not trying to call the kettle blacky here. Guilty right here of this happening, right? It took me a long time to learn this in client meetings, that client questions were not insults on my intelligence or my knowledge. And when you say it that way, we were like, well, come on, how did you possibly do that? But it would happen to me, right? I would get offended by this and I wouldn't take that proper approach of saying, no, you push back on me in any question. And now when I come into meetings with that curiosity, I love their questions. It's a good environment for the clients to always ask questions for us as well.
Another place this comes up, Micah, is when we hear a client or a prospect say a word and we assume that we know what they think that word means. Now, let me just kind of walk you through it for a second. These couple of prospects I met with this week, all three of them independently asked if I was a fiduciary, but they all used the word in the wrong context. And so I said, well, hey, in your mind, what does it mean to be a fiduciary, right? Like, help me understand that question. And all three of them described something that was in their mind that was not what the legal definition of a fiduciary standard is, which, by the way, for some of our listeners, right, a fiduciary standard means you put the client's interest first whenever possible. And when there are conflicts of interest, which there always are, you disclose those and you handle them as appropriately as possible, right?
Right.
Which is not how any prospect articulated it, right? So I said, well, hey, what does this mean? And the prospect says, hey, I just want to make sure that like somebody else isn't paying you to sell me things. Great news. No one else is paying. You are the only person who pays us. No one else pays us to sell things. Okay, perfect. That's what I wanted to know. Awesome. Great.
Jarvis, I'd love to handle that question too from the other side of the coin, because I am a fiduciary as well. And I like to say we're fiduciary before it was cool, but I also have an insurance license.
Yes, yeah.
And so now these fee-only people are going to be like, whoa, right? That's not a fiduciary. But the reality is just what you said is about putting the client's needs first. And so if you still have an insurance license or a brokerage license or anything of that nature, just go out and disclose it. It says, we always put you first. We never want to sell you something and get paid by somebody else. Just so you know, to better service our clients, I still have an insurance license, which means I could get commissions if we decide to help you with insurance. Great news. Yep. You don't have to purchase insurance through me. If I make a recommendation, you want to get somewhere else, that doesn't bother me whatsoever. I was like, the reason we have this is a lot of our clients have insurance policies, and me being a licensed insurance agent, I can get better information on those policies. I can help my clients service those. That's what we do 99% of the time. That's clearly a conflict of interest. And if it's something that bothers you too much, then we can part ways as friends, and that's okay.
Yeah, and this is where we also want to be careful to not get on our soapbox. Now, this might sound like the pot calling the kettle black here, because you and I obviously love on the podcast, like this is one of our avenues for getting up on our soapbox. But when these clients ask about fee only or fee based or whatever they say, right, like that's not my chance to make a moral crusade for the industry, right? Well, the only good advisors out there. There's no credibility in that, right? One of our good coaches, John Barron, he talks about like no one's out there saying that they're a bad advisor, right? So if you're pounding your chest, well, I'm a fee-only fiduciary, right? Who's out there saying, you know what, welcome to We Rip You Off Financial? This is just not happening, right? So you're losing yourself there. But back to let me cut off my soapbox. When a client that says things, Micah, you mentioned the example of ESG, or if they say fiduciary or fee sensitive, or I'm a do-it-yourselfer, or I only invest in this style and not that style, we need to figure out what it is they're saying with those words. Just because we think those words mean something, it's almost impossible that what we're imagining is the same thing they're imagining.
Yeah, really important to be thinking about that. Let's put it in context. Jarvis, let's go through a little bit of other things where we kind of miss the boat in client meetings and prospect meetings is having fun.
Yes.
Right? We can talk about matching energy levels. We can talk about all these other things, et cetera. And we could get into the analytics behind it, but really we're overcomplicating this. It's as simple as having fun and having a good conversation with these people. That's it. Now, we have technical knowledge, right, and what it is, but it's really about sitting down with them and being excited and curious in the conversation, bringing your energy into the questions, having fun in the meeting. Don't tell jokes. Don't be stupid in the meeting, right? So I'm not saying, go that far, but you can't be on the far end of saying, hey, this is just technical. I'm monotone the entire time. This is super professional, blah, 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 blah. Here's what we're doing. That's just not how most people want to function. We want to have a conversation. You want to be serious when it's time to be serious, but you want to make sure you're a little lighthearted as well.
I like that lens, Mike. I guess I hadn't really thought about that. I'm a big advocate, and you and I spoke before the episode hit record about what's the balance of technical knowledge versus communication skills, and we both immediately agreed that it's almost entirely communication skills because you can get the technical knowledge anywhere you want. But I do like that lens of, hey, am I having fun in this meeting? Because if I'm not, right, what's the opposite of that? Then it's just sort of like drudgery, and that comes across to the client and prospect, right? Like they're consciously or subconsciously realize like, this guy doesn't really want to be here. Like I'm an inconvenience to this guy, and nobody wants to feel like the person they're paying. Like when you go to the doctor's office, and some doctors are excited to help treat you and cure you, and some doctors are like, next, are you still here, kind of thing. And nobody wants the latter.
Well, let's go back to our 3 Ps, right?
Yeah.
Personable, productive, profitable. First of all, do I like having a conversation with them, right? And I tell my clients and prospects this, right? You got to hit the first P. If it's not, the other ones don't even matter. If I don't look forward to seeing you on the calendar, if all of a sudden, Jarvis, on my calendar, I'm like, oh, why do I got to talk to that guy again? Right? And I'm rubbing my head, boy, got to go. I am not bringing my A game to that meeting. And that's how I view all of my client relationships. And I tell them, you need to feel the same way. You need to be excited about coming in and chatting with me. And if you're not going to tell me the things I need to know, and I'm not going to be able to help you. So that first P, personable, is really fun. And that means kind of having fun in meetings and enjoying conversations.
Yeah, it really does. And we talk a lot on the podcast about professional development because it's so important to us. And I always like to talk to advisors and say, how much professional development are you doing in the area of communication? In fact, we were recently doing an advisor training, And I was working with some of our advisors on their tempo when they speak. It's very easy to get sucked into jargon. It's very easy when you've explained guardrails for the 1,000th time to get into this like where you're just rambling this out, right? And so we were practicing, I was working with Alan, one of our paraplanners, about pausing mid-sentence, which for a lot of us is like really painful to do. We're trying to get out every word we possibly can and don't interrupt me, right? I got to get to the end of this whole lecture, right? But really, to be a good communicator, I want to pause as often as I can, especially if they're a reflective type of person. If I notice that they're the kind of person that will say a sentence and then pause and reflect, I need to mirror that energy.
Yeah, really, really important. Jarvis, another training we were doing the other day, somebody kind of called me out, which is kind of funny, is I was doing a little bit of an intro of how we do our tax projections with clients and how we do Roth conversions. And we had a CPA on the line, and he was like to explain some technical stuff. And he's like, well, the way Micah explained it kind of alludes to this belief that you don't get any objections from clients when you explain this, but there's actually a lot of objections that you're going to get from clients and a lot of pushback. And here's how you need to handle that. And it was very interesting when that came through, because it really made me kind of sit back and reflect about saying, you know what, I did come out of this with a lot of confidence. Wait, because I have a lot of confidence at it, right? It's the right answer for the client. I'm not coming to the client with some crappy answer and saying this isn't what it's going to be. Therefore, I need to have confidence. I need to have conviction in what I'm recommending, because again, go back to it. I've given the client permission to push back on me, and what I'm recommending clearly aligns with their goals. That's why I have so much confidence. And because I have confidence in that, and I know these pieces are going to come together, those objections go away, because so many people focus on objections when they see the lack of confidence in something. It's like, whoa, you are wishy-washy on that. Why are you wishy-washy? That means there must be something else. What else are you not telling me?
Micah, so I get that. But I want to push back on something there, which is I feel like it's easy for someone in your position, right? 20 years of experience, recognized by Michael Kitces as a top practice, host of the Perfect RIA podcast, like all these things. I feel like it'd be easy to say like, hey, of course you walk into, like, how could you not walk into that meeting with confidence? What about advisors that don't have that confidence, right? Like where can they get that, right? Whether you're fresh in the industry, a year or two in, or you're 20 years in and you've never talked about Roth conversions with clients before, or you've never raised your fees, or you've never done like how do you get that confidence short of hanging out with you for 20 years?
Well, I was going to say that's one option, right? But the other thing that you could do
great
is
for me. I've only hung out with you for 6 years, and it's been my confidence. I'm like, this guy, Micah.
Profitability is like dropping like a rock, but confidence is going through the roof.
Right.
No. So the biggest thing that I tell younger advisors, are you doing the things you're recommending to clients? And they pause, and I'm like, that's a no. So if you want confidence, start doing the things you're saying you're doing. So if it's cash flow management, how do you recommend cash flow management to clients? Are you doing those things, right? I'm not getting on a soapbox. Like, I have my own opinion on what I think is the best cash flow management just because it is, but everyone has their own opinions on this. But are you doing those things? You recommended a Roth conversion. Have you done a Roth conversion? Now, if you say, well, I don't have any money to do a Roth conversion with, then do a backdoor IRA and do a Roth conversion, genius. Because if you have that much money, then you should have an income limitation on a deductible IRA. So make it happen that way. But you need to be doing the things that you say you're doing to clients as much as you possibly can. Your investment strategy. Are you recommending the same investment strategy to clients that you are using appropriately so with yourself? What does that mean? I own virtually every same thing that my clients own because I'm in the same models. We do model investing. My allocations could be slightly different because my time expectancy on when I need the money is different, but I still own those things because I want to be in the same boat with my clients and I want to have conviction in this. So Jarvis, the number one thing I'd say for confidence is, there's two things I'll give you, but number one, do the things you're recommending for yourself.
Yes.
That's it.
Yes.
Number two is come at this and say very clearly, is what I'm recommending clearly the best to help them meet their goals?
Yeah, let's jump on both of those, right? So, and again, I want to echo that you have to be doing what you're recommending to clients, right? It doesn't have to be in the same dollar amount. Let's talk about younger advisors, right? Hey, if your Roth contribution limited, you were limited to $500 because your cash flow, cool, still do it. I remember, Micah, back in the early days of my career when we were more insurance-based, I was at a meeting once and they had 5 or 10 of the top producers for the company were there. And the guy that was leading the presentation, he says, hey, we're going to go around the room and see how much life insurance each of you owns. each of you owns, right? And who owned the most life insurance in that room? These top producers, right? Yep. And so the guy says, hey, listen, if you want to sell more life insurance, right? If you want to be a better financial advisor, this was in this narrow context of life insurance, but it applies. To your point, Micah, do exactly what you said that clients should do, right? If you're telling people they should have a trust, you darn well better have a trust, right? If you're saying backdoor Roth, whatever you're saying, as much as it applies to your situation, you better be doing it. In fact, and you have to be careful to make sure you're not dealing with any kind of front-running things. Long before we'll ever add an investment to a client's portfolio, we've already added it to ours. Because in a small amount, because we're not front-running, but like when we started adding structured notes again, I bought structured notes on all of my accounts. I wanted to see how they showed up on the statements. I wanted to see how the transactions looked. I wanted to be able to go to clients and say, hey, this is what we're doing, and we're doing it in our accounts. I'm doing it in my mom's account. Like, this is what we're doing, because this is the right move to make.
You know, Jarvis, I can't remember if I mentioned this on the podcast yet, but we had one client that we're working with just recently, and they had a ton of money from the sale of a house, and I recommended with maybe Capital One or Schwab that we're going to put the money in, kind of park it for a little bit. And they had gone online, and they had found that there's an online bank paying more interest than this. And it actually, I hope I don't get too much in trouble with this, but it was a Goldman bank, and they were paying more interest, and they wanted to put it at Goldman. I said, hey, you absolutely can. It's FDIC insured. The only pushback I'm going to have is let me explain my experience with that particular bank with you that I just had. And they're like, yeah, what is that? I said, it was an online bank. It was the same thing. I was chasing interest rates. They were a higher rate. I like to do things first to see how it works before we recommend it to a client. I opened an account up with them. I transferred money in for my estimated tax payments, just in a higher bearing savings account until I had to make my payments. Tax time came. I had to make my payments. I went to pull the money out. I got a call that evening from their compliance department that says, what are you doing? And I said, well, you see the nickname on the account is estimated tax payments. Look at the date. I got to make an estimated tax payment next week. I'm pulling the money out to make an estimated tax payment. And their response is from the compliance officer was, do you know what a savings account is for? I'm like, do tell. I would love to know what a savings account is for. Anyways.
Pause. Insulting clients, never a good idea. Keep going, please.
Yeah, he didn't go positive after that. I was like, oh, please tell me what this is. I had a smile on my face. I was like, well, and he has all the cards, right? This is the downside of this relationship. They canceled the transaction. I had to use money from a different account to make an estimated tax payment on time because I couldn't get the money out from that Goldman account. No, that's just what happened, right? Yeah. Now, I'm not saying they're a bad bank. I'm not saying any of those other things, but when I requested money, they rejected it. I missed my estimated tax payment from that account. I had to use money from another account. Luckily, I had money from another account because it's a substantial payment. Yeah. And I was able to make it, but I really don't like it when banks tell me I can't get my money. But it's your choice, Mr. and Mrs. Client. If you want to use them, I'm happy to shoot you over a link. You can go ahead and they're like, hell no, I'm not using that bank because of our experience with it. So one of the things, again, is go full cycle with this. If you're going to recommend an online bank, then pick one or two and go full cycle with it. Go put money in, go take money out. What does it actually look like with the client? That's what gives you confidence in these recommendations. And again, I'm not ragging on the bank. Go do whatever you want to do. This was just my one-off anecdotal experience.
I love that. Mike, I want to draw on the other thing that you said about having confidence in the meeting, which is knowing that your recommendation is in the client's best interest. That's the very best thing they can do. Want to highlight there that none of us knows the future, right? None of us can say for certainty is path A absolutely guaranteed that better than path B. We just can't do that. We can say, hey, of all the paths that are open to us, this one seems like the best, and we're going to go down it until something else becomes available, right? So something that I always had paralysis by analysis on was I would have this prospect meeting, and I thought, well, there's like 1,000 different ways we can invest, and I can't absolutely know for certainty which one's going to be best. Cool. So then I have to narrow it down and say, hey, I have total conviction that this is the least bad option, right? And it could be that I have total conviction because an advisor that I really respect, this is what he or she does with their clients, right? Or it's because, hey, like you and I love to joke about buckets versus guardrails, right? At the end of the day, they're basically the same thing, right? But for me, when I sit down with a client, in my heart of hearts, I think, all right, guardrails is the best approach for my clients with my confidence level. Sure. And I run with it, right? And I don't think, well, hey, Micah's doing buckets, and maybe I should go back and do this reanalysis. Nope. I can sit down with clients, heart of hearts. This is the best path based on what we know and what we don't know.
Yeah, I mean, the underlying fundamentals is relatively the same, right? It's virtually identical. It's a different way to present them, but you present them with more confidence. You can articulate it better to your clients in that capacity, and it works for your clients. next.
Yeah.
It's a great recommendation. There's nothing wrong with that. But speaking of great recommendations, Jarvis's podcast is all about action items.
It is, yeah.
So let's go ahead and talk about some action items our listeners can do this week, besides just listening to us pontificate.
Yeah, well, I'm going to say, action item number one, think back on your last couple of client or prospect meetings and write down whatever you thought the objection was in them. I mean, like literally write it down. Oh, they objected to fees. They objected to my schedule. They objected to whatever. Write that down and then really try to pull a thread on that. Kind of, Mike, as you said, be humble there and say, all right, what were they really trying to ask? Right? This wasn't an objection. This wasn't a defense. This was them asking a question that I had left unanswered. What was that question and how can I better answer it next time?
Jarvis, I think that's fantastic. I would say number two is, what thing are you not doing that you're recommending for clients, and go do it.
Yeah.
Cash flow management, Roth conversions, estate planning, insurance, tax planning, right? Whatever that is, go do it. It doesn't have to be all things. Just like we recommend with clients, I want sticky changes. Go pick one thing and start implementing it.
Yeah, I'm going to say action item number three. If you haven't yet, text the letters RIA to 55123 to get Belay's ebook on virtual assistants. Just this week, I had Zach, my virtual assistant from Belay, go through my expense reports that I had been avoiding updating for our bookkeeper. And she needed to know, like, hey, Matthew, of all these flight transactions, I need to know what they are, not just that it was a transaction on Alaska Airlines, right? So he went back through and said, hey, this was a trip to here for this reason, so that we had that all documented. So something that I had been putting off for months, it was an energy drain for me. He just went back, pulled up my calendar, jumped on top of that. So that's an exceptional resource. Text RIA to 55123. And Mike is smirking. He's gonna jump in here. He's got like
I am, because I've been delaying about this. Our listeners have known my kind of saga with this executive assistant. Had one for a long time. It promoted her, bad idea. But no, great for her to promote. Then I hired a new one, and it didn't work out. So I was absent one. So I finally got around to calling Belay and getting an assistant. They placed him pretty quick. Yeah. I've been working with her. She's kind of working through things. So still in that interim stage, right? Working things out, but it's really nice to be on the side of, now I have someone I can delegate all these personal and business things to, because again, either I was doing it or it wasn't getting done, but it wasn't my best use of time. And so getting them in place, again, Belay or someone else, knock yourself out. Either way, get that handbook so you know what to do, and have a structured way you're going to have these meetings. One of the nice parts with Belay in the process is like, hey, here's how all the structured meetings work. So they had something to benchmark and to grade on. So again, a system that you need to have in place. Awesome. Jarvis, as always, it's a blast. And until next time, happy planning.
Happy planning.
Information designed to change lives. Financial planning.